Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. Today is Thursday, September 10th. I honestly cannot believe where this year has gone. And I say that every day, and I still can't believe where it's going. I think something happened with this COVID-19 in February where our habits changed. And I guess when our people's habits change, the way time moves also changes, because I've heard this from several people. I've talked to at least a dozen people, and they say, Roger, I feel exactly the same way. It's like a twilight zone between February and now. So, yeah, it's really weird how time has gone. All right, so we've got the biggest report of the week. Well, the second biggest report. We've got jobless claims coming out in about 10 minutes. Consensus is less than 1 million. My way of looking at it is this. The 4-week moving average is 991,000. If we're below the 4-week moving average, we're doing well. The consensus estimate is right between 800 and 900, right below the estimate. As long as we're not at 1 million, we should be looking pretty good. And then tomorrow today we also have PPI and the Producers Price Index and Consumers Price Index, and those are going to be fairly important as well. But again, the big report of the week is the jobless claims, and that's coming out in about 10 minutes or so. Let's talk about global economy. Then I'll jump into ETFs, the leading sectors. And then I'll jump into one ETF that I'm really liking, and 7 stocks that are the most resilient in light of what happened the last few days, in light of the sell-off. The biggest factor I look at when markets are pulling back is I look to see which stocks remain near all-time highs or near previous price levels. Those are the biggest clues, because the most resilient stocks, when markets are moving lower, will be the first ones to move higher. And similarly, when the markets are moving higher and you have stocks that are resilient to moving higher, like the airline stocks these days, or the cruise ship stocks, those stocks, or energy stocks, those tend to go lower. So again, this is actually, believe it or not, this is one of the most important principles of the market. It's relative strength. And what it's telling us is, if the market's moving down, how many stocks can outperform the market? Similarly, if the market's moving lower, markets moving higher, how many stocks can underperform the market? So you're looking at this difference, because guess what? The stocks that held up the best during a correction, those will be the stocks that rise the fastest. All right. So again, keep your eye on the jobless claim, and if we're still here in about 8 minutes, I'll go over with you. Let's talk about global economy. Global markets turned lower. On Tuesday, they were weak. On Wednesday, they were strong. On Thursday, now they're weak again. It looks like we're entering a choppy period, which is not unheard of, especially after the strong gains we've been seeing. Well, expect Wall Street to slip ahead of the open and into the open. I checked earlier, and it's down a little bit, less than 1%, nothing substantial. Investors are hoping for additional stimulus from central banks in Europe, but again, don't hold your breath. It may not be as much as we expect, and it may come later than we expect. Forecasters warn, I'm one of those forecasters, that stock price recovery might be too big too early to be supported by uncertain economic activity, especially in third world countries, as COVID-19 infections rise in the United States, Brazil, and some other countries. If you guys think US is bad, take a look at Brazil, take a look at other foreign countries, Greece. Things are not looking great right now. Some governments have reimposed anti-disease controls that hamper businesses. Yesterday, Apple, Amazon, U.S. tech companies had lost momentum late last week, all regained some ground. And again, this morning, they're down again, but I wouldn't make too much of it. Dow climbed 1.6%. The NASDAQ climbed 2.7%. And it had dropped 10% over the previous 3 sessions. As I said, and that's why I want to take a look at stocks today that have not gone down during this whole fiasco where the stock market has lost, or stocks have lost about 10% in the beginning of this week and late end week. U.S. Congress is at an impasse on whether to improve new economic aid package after additional unemployment benefits ran out. The Senate is due to vote this week on a Republican proposed package, but it has little chance of passing because Democrats want more aid. They're going to be gridlocked. And this is why I say that this is not a great time for Trump to reinitiate and reinstigate this trade war. I don't think timing is right. I think the principle behind it is really, really good, because the Chinese have been sticking it to us with this trade war for many, many years now. And they're laughing all the way to the bank while we're not. But I'm glad Trump is doing something about it. I'm just concerned that the timing is the markets are so fragile right now. Anyway, crude oil, I hate to say I told you so, but it went from 30s back to the low 40s. And at that point, U.S. frackers break even because it costs them more than $40 a barrel to buy a barrel of oil for which they will produce. So this is a very, very bad time for U.S. frackers because, again, if oil prices below $40, $41, $42 a barrel, they're literally bleeding cash, which is one of the reasons we have seen the energy sector. I hate to say I told you so, but I told you so. I said this right around here. As soon as I saw prices coming down, we're moving lower again. Demand is not picking up, and all of those bearish oil companies, and you don't have to worry, I'll give you plenty of them right now, expect more downside. Let's look at our filters. Let's look at our CSI scan. Now remember those two videos I did, 2 energy stocks on my chopping block, and then last week I did 2 more stocks to sell, and I got a whole bunch of emails saying, Roger, energy stocks are a buy. No, they're not. They're a sell. Occidental Petroleum, told you so. ONEOK, told you so. Diamondback Energy, I told you so. Holly, told you so. Each and every one of these is a sell. Oxy, AUK, FANG, and HFC, these are sells. In addition to that, we got Phillips, we got First Energy. Oh yeah, don't forget First Energy. And we still have the Wells Fargo. Wells Fargo is a very poor run bank stock. Let's take a look at Wells Fargo. Actually, let's take a look at it here. Haven't looked at Wells Fargo in a while. I'm curious to see if it's gone down at all or if it's been, yeah. See, as soon as the market cools off, these stocks start selling off again. Hardly any bounce. Didn't even go to the 200-day moving average. So today I want to talk about assets that are strong in light of what happened. The average stock lost about 10%. Momentum levels went from 80th percentile to 30th percentile on the S&P 500. So I want to talk to you about certain assets that kept their relative strength and that I'm looking for. I'm looking for copper to go higher. Why? Gold and silver is going higher. Copper typically follows, especially because industrial stocks, look where basic material, industrial, consumer staples are. Over a 1-month period, look at this. Basic material and industrial, look at it's at technology. It's not even in this, it's second, third, fourth, fifth, sixth place. And I think consumer discretionary, I think we're going to see something similar happen. But whenever consumer discretionary and technology are far apart, it means markets are fragmented. When markets are fragmented, it's time to be defensive. Copper right now, and CPER is the ETF that tracks copper. You could trade the futures contract if you want. Let me go to metals right here. And the metals here, you could see here that copper prices copper prices are all-time highs or near all-time, not all-time highs, but multi-year highs. If you could see here, yeah, we haven't gone to these levels for a long, long time. Since 2011, all right? So it's very strong, and if you like the futures, you could trade the futures, or you could take Uncle Roger's advice, and if you have a regular stockbroker, you could take advantage of this by simply looking at, let me give you that ticker symbol, CPER. CPER. Very simple, very clean. It's got plenty of liquidity, and it's following copper. I just showed you the futures contract, and this is the cash contract. Now, let me talk to you about stocks that have held up really, really well during the past couple of weeks. Now, a lot of these stocks are stocks I've been talking about. So, for example, Peloton. Look at how well Peloton has stayed. It didn't go down. It actually went up in the last few days. That's resilience. How about Penn National? Remember Penn National Gaming? I've talked about this for months on end. I love these congestion sideways patterns. How about VTV, Fortive? I don't think I've talked about this stock. or at least I haven't. Look at this. I love these baseline breakouts. They're the best. FTV. Let's look at another one. Caterpillar. Industrial, basic materials. Look at that. Look at that. Ah, I love it. And lastly, Workhorse. And these are the top stocks that not only didn't go down, but were extremely resilient, or the most resilient stocks over the little mini crash or the mini correction, whatever you want to call it. So while Tesla lost, let me show you something here. Just where I thought it would. Tesla went from 500 to 330. That's quite a bit. Workhorse went up. Caterpillar went up. Look at this. Or at least maintain its strength. Went up. Fortive went up. Penn National didn't go down. And right now they look like they're ready to rally. And Peloton actually rallied. A few of them actually rallied. So again, those are the stocks that I'm liking a lot right now because they were the most resilient. And I also like the copper ETF. Now, it's 8:30. Let's see if the report is out. You never know. Sometimes it comes out a little early. Okay, actual number 884,000, below the moving average. A little higher than the consensus, but honestly, the 4-week moving average is what we're looking at, and it beat the 4-week moving average. So again, you may want to watch this video a few times because I packed a lot of goodies in here for you today. So, folks, have you ever heard of alpha trades? They're a group of stocks that nobody else is talking about. I mean it, no one. But they've stored up enough power to make triple-digit gains in 24 hours or less. And again, it's never less than 24 hours. It's actually 24 hours, 2 days, a week, just a few days, but it's not day trading. We've already witnessed gains of 179.17% from Wayfair, 1,246% from Domino's. I can't imagine 1,246% from Domino's. I'm thinking Amazon. Now, every time I'm thinking Domino's, I'm going to be thinking Amazon. It's going to confuse me. That's all your fault, Adam. 2,422% from Fastly. That's crazy. Here's the kicker. There are only 4 different alpha zones staged throughout the year. That's where the vast majority of these 24-hour trades hide. And you'll get plenty of trades throughout the year too. This is not an earnings strategy. This takes advantage of every market cycle. And the next one is coming up fast. Now, I don't want you to miss out. Click on the link below to get all the details before it's too late. Do it now. Don't delay. Don't procrastinate. Get in on this now. I'll talk to you guys soon and have a great day. Bye, guys.